welcome to another Flash Hour Live. As the markets melt down, we tune in. I appreciate you joining this week as we do go live every single week, 4 p.m. UTC for our community. This keeps us accountable. Accountable to who? Accountable to you. This week, we will be covering, if you're unfamiliar with the Flash Hour Live format, it's pretty easy. We go to State of the Trenches first, allows people to funnel in. We get to an overview. It's something the team would like to highlight and push out to the community. Then we move into what we got done this week to stay accountable to you all and what is coming. What is coming is the future roadmap of things we'd like to highlight and update you on. It is not complete. So if we miss something, or we don't cover something, it doesn't mean it's annexed from the roadmap, guys. So seen that in the Discord, but we will cover as much as we can today. Sir.
Good morning, everyone.
Good and faithful leader, comrade. How's your after? I should say, how's your night? I keep saying, how's your night?
Yeah, it's good. It's good.
It's relative. It's relative to where we are in the world. This is why on DGen hour I say instead of whatever UTC at time it is, because it confuses the hell out of me, I just say 9:30 Eastern Standard Time, whatever time it is where you are. Yeah. So yeah, it's going to be a good week. This is a good week. I feel it. Even though markets are a little crazy, it's a good week. It's a good week for eyeballs. Perps are going wild. Solana is bustling with activity, and yeah, pretty positive right now. Yourself?
Yes, I think a lot of work is being done on behind the scene to get V2 live and ready for everyone, and that is where we are, busy all around.
Yeah. I was about to say, actually, to be honest, it could be just an internal feeling because I know what's going on behind the scenes. So excited for the future of Flash for sure. We are full steam ahead in the trenches. Getting into state of the trenches, Solana RWA ecosystem. By the way, last week, guys, it was like 2.2. Now it's at 2.8 billion in total volume, or total value. Sorry.
Wish we could have longed this thing. Longed.
It was an index. Oh, that would have been.
Yeah.
Damn, that's a good idea. Holy crap. You just gave somebody absolutely next Coliseum. Somebody's doing that. Let's see. Perps. Oh, I just put this in there for VBoo. Perps handle goes live for Solana as Solana Foundation acquires its 200th X handle. Just kidding. VBoo, head of Solana Foundation, kicks off trading comp with Hyperliquid Trader. I thought that was really funny. Were you following that on the timeline?
Yep, I think I saw how much up VBoo is on his trade, and I think yeah, it's all you need is that energy, and the energy drives you home everywhere. That's what VBoo is carrying right now, and it is carrying everyone around them as well. So very, very nice to have him shouting about things that are being done behind the scene. I think that's what we need a lot. We need a lot of cheerleaders, and that is very much needed because the whole ecosystem is very engineering focused, whole Solana ecosystem, and even us in the team. So when you are doing a lot of engineering, you get much more pessimistic about future than anyone else. So I think we need more cheerleaders like VBoo in every team. That helps us to push the momentum forward.
Yeah. One thing I think VBoo is for sure doing is a fantastic job at keeping eyeballs. Whether you agree with his tactic or not, it's irrelevant when it comes to the eyeballs. He is getting the attention, and he is kind of turning into what I would call the Mert of Solana. So, and it's working, and it's good. However controversial it might be, it doesn't matter when it comes to garnishing attention. Monday, Europe's, I guess that's how you say it. I apologize, by the way, if that's totally wrong. I'm retarded. Europe's largest asset manager 22.4 trillion AUM in Spico, which is like basically Solana based company or whatever, I guess like Treasury or something. It's 1.7 billion AUM announced their UCITS fund on Solana. So combined, I guess Spico is the one that facilitated it, but they are bringing that fund to Solana. So that is absolutely insane. Not sure how large that fund's going to be, but pretty freaking large. We'll say that. Anza shipped P token to mainnet and Alpenglow on the community test cluster. So
I think P token shipment was a very huge upgrade. I think that is gonna propel a lot of payments. Idea that we always floated around, that you don't need Visa or Mastercard network, and you have this competent decentralized blockchain that anyone can plug in and use the network as the
Yep.
source of truth. Because now it's like every POS terminal basically depends on the network of Mastercard and Visa to verify any transaction.
Yep.
But we all know Solana gives that verifiability. When I send you anything, and if you give me that specific address, I can literally say that you have that money. Like there is no way to it.
Yeah.
So that is where the network confirmation
Mathematically
comes in.
provable.
And yes, exactly. And once the costs go down, and when we go in parallel with them, I think that is where the whole payments idea and bringing on chain banking actually makes more sense. And I think that is why the idea of P tokens also came in. And I think one more important thing that we have to also look into is about the idea of account creation. Because now every account, like every token you hold in an address, needs an account, and that needs to
Yep.
be addressed as well. And I think that is also something Anza has in their roadmap, where they will
Yeah.
slash the cost of account creation. I think I saw an SIMD on that, and it is a very, very huge change. Because right now it's like it costs about
It's
something like,
self-limiting right now.
yeah, it's like if you have like 50 token accounts, it will cost you something around $2 or $3. I think that is something that holds back. Imagine if you want to scale to billions of people, and there
Yeah.
are billions of accounts, and then it becomes suddenly $2 billion or $4 billion worth of accounts. That
Oh,
is
yeah.
not mathematically sensible. But yeah, that is where the direction is heading, and P token is one of those directions.
Yeah, P token's an amazing upgrade. And if you're unfamiliar, basically it shrinks the cost of a token account. Is that correct?
Yes. No. The token transfer fees
Or token
is very
transfer,
low,
sorry.
right? Yep. It's basically very low right now. I need to run the numbers, but yeah.
Yeah, so I mean, this has a direct impact. And the craziest part to me is like it essentially went live and just everyone benefited and nothing changed.
Yep.
So that is incredible from the Anza team. Wow.
Yep. But our tokens are still on the SPL stuff. We have to move to this new upgrade. I don't know how that transition will happen.
Oh yeah, you're right. Yeah. True. I have no idea. I wouldn't even be able to speak on it. KRWQ Cash. Korean won peg stablecoin. Just wanted to say that Forex is even expanding, and more kind of like native implemented Forex solutions are coming. Some of these things are like directly out of their nations. So some sort of company there that is bringing it native on Sol, which is pretty cool. I like to see that. All things need to be absorbed by blockchain, specifically Solana. And then Kraken Institutional rolled out regulated SPL custody. Kraken is huge, by the way, starting with 18 tokens. So again, we're seeing just absolute explosion in institutional adoption. Unfortunately, CRYMBO, Crimbo, I don't know how to say it, Crimbo, sure, and integrated with Solana to bring identity verified execution to institutions and RWA platforms. That's because institutions don't want to have the RWA stocks, equities, things of that nature on blockchain without know your customer. So KYC. So kind of the axis of evil pushing identity on blockchain. It's great. Jito introduced Fire BAM. It's a Fire Dancer implementation of BAM, which is cool. That's good. It's good to see, different things being tried out, different things being brought to Solana. Optionality is always the best. We keep things testing. So we'll see how BAM does in privacy and deterministic execution. All right. One narrative I saw that was going huge all of a sudden is this friggin' collectors thing. So that narrative I called out like a month ago, I saw it just starting to, poke its head back up. I don't know if it's going to lead into NFT, guys. Don't get too excited. All right. That's probably gone. But there is this collector thing, real world asset collector community that has just exploded. Proofs in the pudding when you look at all of the news around it. Collector Crypt teamed up with comicbook.com. They have 40 million users. BZ expanded its tokenized collectible platform to Solana. Everybody's kind of figuring out that RWA narrative where you take a real world asset and you kind of tag it with an NFT. They're figuring out that is extremely good on Solana. So a lot of these kind of RWA platforms are moved. There's way more, by the way. That was not just the only two. I just couldn't include them all. Glider introduced, oh, there he is. There's our other comrade.
I think he's traveling, so it would be kind of on and off, but yeah. I think we'll get a better commentary on Peter Kunz from Zohaib than me because I haven't read on it lately. But we'll see.
GM, we wanted to hear your opinion on P token, the migration. What do we have to do, and just overall the
what's going on?
Good part. Like we've finally got the mainnet feature activations back, and P token was a great one. So SIMD 256. That's the process that we've been tracking for months now, and it optimizes, or it kind of hot swapped the program binary for the most used program on mainnet, which is token program. So now we've got like this good stuff which is hyper optimized. It uses 10 times less compute units. So overall, you're looking at around like 10 to 12% of block space being freed up because of this excess compute now being like eradicated. And so now you have optimal token transfers. Now every program, including ours, uses token transfers to move funds between custodies, between users' wallet and programs that they interact with. So yeah, we've got a free 12% kind of an optimization in terms of CUs. Now,
just wanted to know, would it affect the token account creation, or this is a different thing?
No, this does not reduce the account.
It's just for the transfer.
Yeah, it's just for the amount of priority fee basically you have to pay. But then the problem is wallets and apps kind of need to reduce the CUs that they request. Otherwise, you're still paying the same, and then that's just free SOL gifted to validators. That's why I think Solflare has been on top of things. But yeah, a lot of other wallets need to follow suit and kind of reduce the CUs. Sending SOL or sending USDC or other SPL tokens in particular. And token keg, which is like old tokens. Token 22 maxis out there, no benefit for y'all. Token 22 still remains a pain, and it isn't optimized at this point. So yeah, I think this is just the start, and as we see a lot more on it, maybe P associated tokens sometime soon, and other programs moving forward, we should also see reduction in rents. Now, the other interesting part with these, especially for like some meme coin connoisseurs, would be the ability to extract extra SOL, which is sent on to mint accounts accidentally. So if you have the mint authority, you can reclaim the excess SOL that someone might have sent. So the good stuff for like USDC and other token mints, which have like a lot of SOL accumulated because people accidentally eventually send SOL to those addresses. So that's a good part of optimizing a very heavily used program. So overall, a great improvement. And for us, it essentially means yes, like even with the migration and stuff, tokens still remain on chain. The tokens do remain kind of in the same state. So that's hyper optimized for us. You do token transfers in a lot less CUs and a lot more optimized. And then it's a race to kind of get CUs to zero. Shout out to all the people kind of doing a lot of good work behind the scenes. I think people have heard of Pinocchio, and then recently Quasar and Anchor V2. All of these frameworks are kind of heavily oriented towards reducing the CUs by a margin of like 10x. So yeah, it's CU optimization season, but on leverage.
Let's go on leverage. That was a good ad. Well, there it is from the man himself. Glider introduced the Solana ecosystem portfolio for auto rebalancing across major assets. That's one that's used. It's heavily pushed by was AI16Z. So you could see the ecosystems kind of coalescing around ways that it's easier for like the agentic AI world, and Glider, I'm sure, is well aware of that. Milo rolled out again another AI agentic rolled out its V2 platform for autonomous traders, and Noah AI launched Noah 3.0 for more efficient AI engine. I don't really know what that means entirely, since they're probably a wrapper, but it probably means like better prompts. But if you know how this stuff is built, it's kind of fugazi sometimes. Let's see. The overview. Now you get it. What does that mean?
Just a minute. Yep, we have access codes that are live right now, and now there is a new method to get people onto the beta mode, which is just directly by giving out specific access codes, and that is what we are giving out as we speak. I've actually DM'd a lot of people these access codes, and the review has been phenomenal, and I'm going to continue giving out, because the older system was on the direction of addresses where we had to get specific addresses and we used to whitelist them. So now it's just access code thing. But I think the discussion in the team is more on the side of even allowing people to just get started with directly trading on V2 beta as well while the migration is being done. But the only caveat here is about the positions and everything that you do on this beta mode won't be carried on to the final V2 launch, because this is almost like a DevNet system that we are working with. So we'll discuss. I think that is something that we're going to be discussing in the next section. What's going to come.
What's coming next? Or what did we get done this week? Sorry.
Yes. So, yep. I think that this is a question that we will be answering in this week, about that. Should we just, open up beta for everyone, because we have so many exotic assets on beta. Just today, we added Russell 2000, which represents the stock market, the Russian stock market. It's an index which represents the collective of the top Russian assets.
It's basically Russian SPY, right?
What?
It's like
yeah. It's a
not an actual SPY.
I was like,
that came out weird.
That did came out weird, especially on this call. But yeah, that is live, and I think we'll have a closer discussion, and then we'll probably go open this up. But do you have any comments on that?
Yeah, I mean, one of the things that we've been following up with Bit has been like, we need a lot more assets, and we need a lot more 24/5 feeds. And yeah, they've been phenomenal in kind of getting new assets up. But yeah, there's still like us being held back by not having quality oracles, because at the end, you don't find liquidity for these assets. Like imagine trying to find liquidity for IREN or any of the interesting assets that we are offering here. So that's the good and the bad part. We need quality oracle sources, and we need them to be live when traditional markets go off. And maybe 24/7 at some point as well. So yeah, putting all of our efforts in making sure we have the assets and we have them tradable as long as traders would want.
Yeah.
So
And
24% is the
quality
goal. But yeah,
price,
pushing towards
quality
those.
price feeds. Definitely need the price feeds for sure. And then the sFLP removal for Flash Liquidity Pools. What does that
That's
mean? What does that entail? And why is that important?
Yeah, this is
Yeah.
a very important decision that we have taken in rounds of the performance of FLP, because sFLP basically reflected the direct value of the index, while what we have seen so far is the index itself doesn't perform very well because the fees and the PNL does not get into it. And overall, some people who like to collect their USDC directly sometimes get confused that their the index is not performing well because they don't understand that Solana itself is not performing very well. So I just posted about it through Flash's handle, and you can open up fstats right now, Max, and we can show you exactly how a dollar invested in FLP1 versus Sol since it started performed. And you can easily see, Sol is down by minus 47%, but FLP is up by 18%. So that is a performance upgrade of about 55% of more, which is a very, very neat representation of how FLP pools work. So Max, are you able to pull up fstats here?
Yeah, of course.
Yeah.
Did you send me the link you said?
No, just fstats.io.
Oh.
The analytics page. Yeah.
Nice. Do you want V2 or just V1?
No, just V1, just V1. V2, we haven't started any tracking.
Cool.
Detailed tracking. Just wanted to make it very clear of how the performance. Not here. Just go on the overview page. Overview.
Oh, that's right. That's right.
Yeah, here just select $1 invested. It basically shows you a dollar invested into multiple assets, and then you can just hide all the assets and just have Sol and Jito Sol below. Like, just show hodl. Click show hodl.
Show huddle.
Yeah, and then on
Oh, I got
the
you.
bottom
Okay.
you can just unselect. Yeah, so now you can basically see here that if you had invested a dollar when FLP was launched, and if you hodled it till today, which is almost about 2 years, or it's like 18 months,
Mm-hmm.
so you would be down by about 41% on your investment.
Mm-hmm.
But if you had done the similar investment in FLP, you'd be up by 18%. Although Solana, which is like the major chunk of this index, is down by 41%.
Yeah, so the basket of goods is outperforming the overall market. I mean, that's literally
not the basket of goods. The
designed
FLP, yeah, the FLP's performance, which bakes in the fees and the PNL of traders, is outperforming the pure basket by a huge margin.
Oh yeah.
So what happens is, this is the power of auto compounding as well. So FLP1 auto compounds its yield, but sFLP gives out the yield every day, which kind of gives you the feel of just invest in an index. And since markets overall, generally, when you see, like, I'm sure everyone knows like how big of an industry is the index management industry, because indexes, through its performance of compounding the yields, the returns, gives you a much better performance on an year to year basis than just taking profits or not compounding your performance. And that is the reason why we want to get rid of sFLP, which is I think a lot of people are in sFLP as we speak, but the performance is simply not being reflected in it. Is it going to add something?
Yeah, for sure. I mean, performance-wise, FLP has been the better choice, and that's the reason we ended up launching it. Because if I don't know if people remember, sFLP was the original liquidity pool structure that we had, and then there was a change, and then like we had this auto compounding version as well, because that made a lot more sense. And on the technical level, what it does is, since you're isolating yield every day in USDC, now this yield is not used by the pool anymore. So it's literally draining the pool of usable assets. So if you auto compound it, if you reinvest it in the pool, we also have this like more liquidity in the pool, so it's better utilization, so better capital efficiency, and all of these things get unlocked. And as we progress with migration, this has been a flagging concern, because with ER as well, like you're moving at light speed, you're kind of, you have no abstraction and transaction fees and all of that stuff, so it kind of increases the trading volume. And if trading volumes increase, and then you have like this isolated yield kind of being put out of utilizable collateral on the pool, it kind of shrinks the amount of liquidity that's available. And that's the last thing we would want. We want to grow the existing liquidity pool. We would want to have like a lot higher tradable sizes served by the pool, which means utilizing every cent that's available at the pool's disposal. This is where I think one of the biggest pushes for deprecating the sFLP isolated USDC yield structure has been like central to our decision. So FLP is the same token that you have. Like there's going to be no change, but sFLP, if you have staked, we should be having communications going out this week on finalizing the plan, and then like having the date for migration and the auto rollover. So if you have sFLP, even today you can go and migrate your staked FLP or sFLP position to the corresponding FLP. Yeah. Super. And like once we have everything finalized, we'll be releasing the announcements and letting you know that you can always, like even today, go and migrate. But then if you fail to do so, your staked sFLP would be converted automatically when the migration is to take effect. So that's the biggest part that we have, and yeah, that's the task for the week. We're going to be announcing this and kind of making sure everything is put in place for users to understand what's happening, and for anyone who's kind of invested in sFLP to understand what the value proposition of compounding their returns would be.
Yeah, and it's super easy to do that. You could just literally hit convert sFLP to FLP. You can hit 100%, enter, good to go, sign transaction. Very streamlined for you all to migrate. So if you are looking to do that, it's very simple. Earn tap, get to whichever stake page that you are invested in, and just hit discover more. Or if you see it up here and this, you can actually just get directly to it through there as well. So either direction, you will see convert sFLP to FLP. So very, very simple.
Yep. So you might have to close your Discord because we're getting a lot of notifications.
Sorry about that.
So yep. Moving ahead, we have new assets listed. We have XRP, we have Lighter, we have IREN. I have no idea what IREN is. I was asking Panda what is it, and I'm yet to find what it is. But yeah, I think this is the most neat upgrade that we have done so far, and we are very happy and confident about how things will be rolling out as we go live and open up for everyone. Mm-hmm. But so far, I think things are rolling out very smoothly, and we are basically making things neater so that when we want to add more things, it becomes much more easier and faster for us to add and remove assets as we want to scale things up, and remove the things that are not traded if we want to as well. So that is what is being tested in beta. And then I think Zoeb would highlight that best, that what we're gonna do on the migration stuff and where we are with it.
Yeah, one of the biggest things for us with migration has been retaining liquidity, making sure LPs also kind of don't have to come in and do anything explicitly. So the migration kind of takes the existing liquidity and existing positions without any downtime to the V2 powered engine. And the majority of our efforts over the last couple of weeks have been to make sure that we have everything covered in terms of security and in terms of like having the right UX in place. And this week, we are kind of just putting in everything that we have got into making sure the experience is as smooth as possible and avoid any potential downtime. Now, the number of markets on V1 and V2 right now differ by a whole lot. So there's this process of like moving existing positions, restructuring the accounts in such a way that you have backwards compatibility And then you also have like this improved structure of unified position accounts, which is the background of how we do operates. And then there's also this idea of sponsoring all of the fees that we have got. So V2, the feedback on V2 has been impressive, and I think people have been trying it out, love the experience. So like, it's a big change for us to kind of go in, move the underlying structure in flight, where like there's no random closure of positions, or someone who's wanting to hold a position continues to hold the position without any change. And that's the thing we are nailing through the week. So DevNet migration over the week is what could kind of further strengthen the whole effort in terms of like having the broad ready structure tested, validated on DevNet, and then like have the final go live for V2 migration for mainnet. So that's the plan for the week, and on the sidelines, kind of continue the effort to deprecate sFLP, because post migration, handling sFLP's isolated liquidity, as highlighted earlier, kind of creates this trouble where you have a lot more volume going through, and a lot more yield being isolated, which needs to be tracked, and it needs to be isolated. So it kind of needs to be moved from one token account to the other. And the number of loops between what happens from ephemeral rollup to base chain, which is mainnet now, kind of keeps a triggering cycle. So in order to avoid any sort of a bad experience, or funds being locked up for no reason, which is directly affecting available liquidity to be traded, is something we're focusing on. So sFLP deprecation is like a step 0 or step -1 before we can go to migration, and that's the current focus right now. We need to kind of have sFLP converted to a unified FLP, or a single LP token per pool structure, and then migration would follow suit.
Yeah. And
And-
then we got the marketing efforts over here.
For sure.
With that transition to mainnet, or migration to mainnet, the Seeker campaign part 2, since part
Yes.
one went super well.
Yeah.
And then I do know some people had some issues with the Seeker phone. If you could do me a favor, it's really genuinely not, if you are watching right now, it's really genuinely not our fault, I swear. We have tried everything. We've exhausted all ends on our side. It's actually
fought a
pretty
lot.
simple. Yeah. And, even the retarded janitor got in there and tried to help, wasn't able to. The only solution that we've found is actually where you just go into, I'll hold it up here. You go into, you hold down or press down on your Seeker phone. You'll see app info, and then you'll see that you can go to storage and cache. So if you could see there, storage and cache, you hit storage and cache, and you just do clear storage, clear cache, and that will actually fix it. So this is the only solution that we have found on our end that clears all of that for you, and then you're ready and able to quickly get back to trading on Flash Trades. So Seeker campaign 2, I apologize for that interruption.
Oh, it's all good, all good. And the next important thing is about the 24/7 markets that are coming on Flash. And we've been trying to get this thing for so long. It was kind of hard, and it's still hard, but we are using a weighted average system with specific bands that control the price over the weekend when the main markets are off, and during those periods we'll have the price between the bands, which is averaged from the markets where this assets are trading, and we'll be going live probably with crude oil and natural gas, and we would be the best place to trade 24/7 markets on V2 because the fees is the lowest. I was checking the comparisons that a lot of people were doing, which was against Phoenix and Hyperliquid, and I was like, we are still 50% lower than whatever those guys are offering. We have only 2 bips fees across all the markets on Flash Trade V2, and
Yep.
that would be opening up probably in 2 weeks max. So what do you say?
Absolutely. I think that's where we are. Get the migration for existing liquidity, and then uh, V2 is all we've got. And I think with markets 24/7 is an interesting take. Fighting, I think the battle is on to kind of zero fees right now. That's where I think everyone is headed. But it's also important to know that fees is not the only factor. You've also got to look at slippage. You've also got to look at like what kind of spread you have, and the worst part, you have to also look
Price
at
impact.
the possibility of exiting your trade, getting into a trade, and then later, if market makers kind of pull off liquidity because of volatility,
Yeah.
that's the biggest trouble I think that people face when they're trying to kind of catch uh, the knife edges and kind of make a quick buck. So that's where I think the parallel effort to kind of have 24/7 markets, especially with the current distribution of volumes over the weekend, is quite interesting problem to solve. And yeah, people have been like trying out different approaches with price bands and kind of uh, dampened price action, and market makers kind of doing their thing, and geopolitics also kind of helping the case. So for us, the idea has been, get the best sources, aggregate them, and make them non manipulatable, because obviously, like, if you've got millions, you could move the markets, and that's something I think we've seen over multiple venues. Like, okay, the guy with the biggest capital kind of leads, and then hyperliquid has become a potential source of price discovery for real world assets over this specific short period of weekends, especially for oil, and commodities which are not tradable elsewhere. So that's an interesting problem to solve for a lot of platforms. But um, uh, you know, market makers kind of holding back, and a quick liquidity crunch can wreak havoc for like 20x leverage positions, which is why we want to be conservative. We want to make sure the systems are resilient before we kind of go live. And yeah, shout out to Oracle providers, Pith, Stork, and everyone else in the ecosystem kind of working towards potential solutions to those. So yeah, interesting proposition for us to offer. And like once we offer those 24/7, I'm sure we will be the best venue uh, with the most accurate pricing.
Isn't it like the Ouroboros if Hyperliquid is getting its pricing from oracles, and then they're also used as a pricing like discovery point? I don't know. That doesn't make sense to me. Maybe I'm
I mean, this is specific to weekends, which is why they also have like these other mechanisms, especially the price ban, strict enforcement. You can't deviate the price beyond a particular preset value. So that kind of limits what market makers can do, but then you're still at the mercy of potentially big market makers in the space.
Yeah.
So that's why I mean, it's
Whenever-
incentive space, and then we've got to be sure we do the right thing.
Yeah, absolutely. Well, you're always ahead of it. You're way ahead of me, that's for sure. Let's see. Phase 3 of launch. I definitely wanted to bring up funding mechanism to make sure that we at least cover that this week, because it's been a few weeks.
Yep, and that's the thing holding us, migration, and like essentially getting funding on mainnet right now would be a lot less beneficial, given the structure, and given the OI skews that we've historically have had on the pool. So once migration is done, the plan is to have funding mechanism kind of replace the current margin fee, which I think
Yeah.
few people or for few users have been um, a bit not too happy about how the margin fee structure works, but it's a necessary evil for us now. Like, given you're locking up liquidity, that's a guarantee for you to exit. Like, even if the market's moved over the weekend, and if you have a gap up or gap down, and you are in profits, you would be able to realize those 100%, right? So that's where the guarantee to settle profits kind of comes with the cost of having to pay the fee, because LPs, I don't know if you've noticed, you can't exit on a weekend. So LPs are being held in the pool in return for a marginal fee. supposedly the margin fee itself. So that's where the costs kind of add up. That's a cost basis of having a trade, a perpetual trade rollover when the markets aren't live. It is like a necessary design decision we had to make. And
Yeah,
with that,
first.
like funding kind of changes the dynamic by a bit, right? You would still have, like, we're talking of 24/7 markets, but the rollout is going to be a bit too stretched out because you're going to start with commodities like WTI and nat gas, and as mentioned. But then as we move forward, we would have maybe equities at some point, where even Nasdaq maybe announced like 6 months ago that they still want to have 24/7, but then like this, it doesn't materialize so fast. So yeah, you would still have markets that do close for the weekends at least, and then like you would still have the idea of funding being paid or received when the markets aren't live, and that's the part we are trying to solve. Like, okay, it shouldn't be punitive to users, where they get punished for just holding their positions, and at the same point, it shouldn't be like a free ride for LPs to be stuck for the whole weekend, and then accept the price action effect as the markets come back live. So we are ironing all of the inefficiencies out of the system. And like before even we get to those, I think this week what we also plan on is to slash the margin fees by half, and to make them competitive to funding venues. Right now, it's high on the scale for sure, and that's been the case. Like that's also been put in place to make sure LPs are well compensated. So now that we have all of the data being reanalyzed, and then the sFLP to FLP conversion or kind of migration also in place, they're confident of kind of having the margin fee reduced without affecting the effective returns that LPs get at the end. So yeah, margin fee being reduced, which translates into a lot more users now being interested to trade and hold positions for longer, and have a potential OI balance in place, makes the risk return ratio for LPs a lot better. So that's the whole plan with funding mechanism, eventually kind of being the star metric to kind of have a proper OI balance, which reduces the pool's risks to price action, where people are leveraged long, because right now that's been the case. Like the OI is skewed towards long by a whole lot. Which most of the time
Yeah, in
ends up-
some markets, actually, sometimes I keep my eye on F stats quite a bit. Sometimes it's actually, obviously depending on what's going on, but sometimes it's massively skewed short too. I mean, rarely.
Yeah.
You're right. The majority of the time, it is skewed
Exactly.
heavily long, especially on Sol and BTC.
Exactly. So idea with funding is to kind of dampen it a bit, so that we have better OI balance, and we incentivize people to kind of come in and take the opposite end, while having like the best possible efficiency for the pool to operate with its capital.
Yeah. And then what? Just I mean, obviously we have margin fees going to the funding mechanism. I think also what it'll do is it aligns what do you call that? Like linguistically with how the rest of the trading platforms have their, because like one question I've had probably more times than I can count when going into like trading groups or things like that, and actually having to talk, is like, what's the difference between margin fee and funding rate? And I'm like, all right. It's like it's not exactly the easiest thing to explain, but so it will bring that into alignment too, which will be really nice. And then one thing I did, we've got time, so I just wanted to bring up one more thing. First, order books, of course, and then the second thing was the volatility fee. What do I know you had said something previously, either internal on one of these lives, I can't remember, but the volatility fee with funding mechanism can also change, or no?
Volatility fee in particular has been put in place to make sure that during extreme market moves, so even for Sol, like we've seen 100 bit move in a few seconds. So it's in a couple of seconds, which means you essentially get maybe 2 to 3 blocks to put in the price update before you kind of realize that kind of a move. even for assets like Sol. So you're not talking of some random shit coins or meme
Yeah,
coins. Even
I've been
Sol
liquidated in a few of those, so yeah, I'm aware of those.
exactly. So yeah, I mean, it's not to kind of penalize traders, but it's to make sure the pool is not overexposed to such massive
Extreme moves.
extreme volatility in the market. So volatility fee kind of makes sure if a trader is getting into those, he knows the cost of placing a trade in such markets. Because if you traded on order books, yeah, the spread would be crazy at that point.
Yeah, it
So
would be nuts.
it's the closest system.
Getting out would be really crappy, basically.
Exactly.
You're going to lose your shirt.
Which is why like volatility fee is designed to model how an order book would behave without having the obvious flaw of like the maker being able to manipulate the market against you. So that was the reason we kind of had a volatility based fee marked in. And coming to like the whole idea of order book, or kind of having our structure of order books built on top, that's something we've been talking about internally. We have had a lot of discussions around those, and kind of iterating over different designs, like from what Manifest has to what Phoenix's original order book systems have had. A lot of new interesting takes as well.
Yeah, for sure.
Assembly level optimizations for better matching algorithms and kind of putting it all in place. What we believe is pool-to-peer systems have inherent benefits over order books, and that's something I've been defending for or kind of holding a defensive positions against for a long time. So yeah, like pool-to-peer versus order books. There have been a lot of discussions around those, a lot of debates around those. But then like
what about a hybrid? Because they both have their benefits. You know what I mean?
Exactly, which is what the
and they're
eventual
extreme polar opposites, which is kind of funny because the hybrid makes the most sense.
Absolutely, and I don't think hyperliquid would be what it is without HLP being in some form, like the backstop liquidity pool. So yeah, like eventually we would also want to have a model where we are not at the mercy of market makers. So the pool-to-peer model kind of scales very well in that direction. But our focus right now is to make sure we can offer compelling UX against what majority of venues would provide. Everyone is to just build an order book. Again, the same issue arises. Where would you bring market makers from? And if you're trying to kind of poach in market makers from other markets, it's going to make things worse. Like let's say even if we have half of the distribution from hyperliquid move to a different venue, then the net effect is the same. Takers would then have to kind of either split orders or kind of go multi-venue to kind of fill up big orders, which is where we are trying to optimize a system which does not warrant that kind of a thing, where we are not left at the mercy of market makers, and our users continue to have the same experience as we have today. So order books, yes, like down the lane, but there's still a lot more on the pool-to-peer systems that we have, like the current FLP structure, to offer. And I think that's where we've had a lot of interesting ideas with build your own pool. So if you're a market maker, just come in and configure your pool, deploy your capital, operate on it. And as a single LP, you could essentially be your own market maker. You can move the pool. And the benefit of a multi-asset pool that we have with FLP would be you can find correlation, you can find a lot more stuff. So instead of just everything being USDC backed and then having strict ADL limits and a bad liquidation cascade, you could eventually have cross-correlated assets depending on an oracle at the end. But the oracle could just be your own market-making strategy, which is posting and competing against other venues in the space, and then kind of evolve the system from there. So that's been our kind of current mode that we would want to like further pursue and kind of perfect before we have any form of like order book structure directly built on top of Flash. So ephemeral rollups allow us the flexibility to kind of experiment with a lot more efficient system than having to kind of do this all on mainnet and have market makers spend like ridiculous amounts in transaction fees, in priority fees, and in kind of just perfecting the idea of landing an order update on chain. So ephemeral rollup part kind of allows us to supercharge over those. And as we continue to have discussions with market makers in the space, we kind of keep evolving on ideas. And I think that's where V2 is headed. V2 would provide the best UX for retail traders and institutional traders alike,
100%.
while guaranteeing that we are able to kind of further facilitate any form of trading pattern that benefits the marketplace, like market makers and takers, everyone that kind of participates on Flash would have like the best UX. That's what our aim is.
Yeah, and that's both traders and market makers. So that's kind of the massive benefit for market makers is the no transaction, the ordering of the blocks, all that good stuff. So it definitely makes a pretty compelling case for the order books with market makers on Flash Trade. Anything to leave off with, Nas? Been quiet for quite a while.
No, I was just checking some stats. So V2 is pushing a lot of volumes as we speak, and we're happy to validate as we speak on the beta side of things that people are loving the experience and they're sticking around as we are giving them more access and adding more assets. So this is something of a validation that we are trying to also follow up, and we're getting a lot of feedback every day. There are a lot of messages coming in, a lot of tickets coming in on ways we can improve things, and we are following up. And I think props to the engineers that are working very hard behind the scene to make this happen. And yeah, V2 will be live very soon for everyone. Looking forward to go live with everyone and just do weird stuff once we are live on V2 with everyone.
Yeah, definitely. V2 is a game changer. Zaheb, did you want to leave anybody with anything else? I know you covered quite a bit. So
not much. I think one of the biggest things over this week would be the sFLP to FLP migration. So have your notifications on. We'll be communicating the process fair and square for everyone. And if as an LP you want to migrate your stake yourself, it's live and you can do it anytime. That would just allow you to be in better control and make the move at your convenience. Also remember that we still have like maybe $100,000 left in unclaimed rewards. So if people stake their sFLPs, they've been accruing yield and they haven't been paying attention, sadly. So yeah, it would be nice if you could collect your fees and kind of, if you would want to, you could always reinvest in the same pool, or eventually we would have to kind of keep this isolated pools aside to kind of have the yield available for anyone to come up anytime. That's the point of on-chain transfer or kind of transparent programs which kind of keep track of all that you've got. Any place, like even Jupiter Portfolio, if you just put up your wallet, you see those.
Oh yeah, that's true.
You're pointed to the right direction to collect them and claim them. So yeah, if you've been an sFLP staker, it's time to collect your yield, be active, and then like be ready for the migration coming ahead.
Yeah, absolutely. Don't make us force you take your money.
I don't like that term, by the way.
I don't even know if that made sense, to be honest.
Yeah.
Could you please check your portfolios, people? You're always crying about not making money. Good Lord, you got $100,000 in there. All right. Well, I will bid you both adieu. Thank you again for another Flash Hour. I'm going to do my outro. Anas,
Oops.
Sir,
Bye-bye.
Looks like you're on daddy duty. Zaheb, see you, sir.
See y'all. Have a nice one.
All right. Well, as you can see, there is the perfect timing to get off as Anas needs to go be a dad. I've been there 100 times over for sure. Now, thank you all for attending Flash Hour. Of course, as we move into V2, there's going to be a lot of communications with us. It's not really, we're trying to do everything to where it's hands off for you. But some of you got a bunch of money sitting there. I don't know. Maybe you should pay attention. You know what I mean? Like we're trying to hand it out to you. So check your portfolios. Make sure that there's not some extra liquidity that you didn't even realize you had sitting there on the sidelines. And go collect that with sFLP since it pays out USDC. Some of your USDC is just chilling. And there's a lot of locations where you could deploy that and make a little bit more yield, maybe an FLP. Just convert it right over for me. That'd be awesome for those traders. V2 going live for everyone. I don't know how what the time frame is on that, so don't get too excited or kill me on the timeline here. I know a lot of you love to harass me on X or in the support tickets. It will be going live for everyone, so there is no definitive time frame. But till then, we do have access codes available for anyone interested in V2. If you've not got access, over 100 assets actually listed right now, live for you to trade. I believe it's 100 assets. Hope so. I've been saying that for a while. If you are interested in getting on DGen Hour, that is 9:30 Eastern Standard Time every single morning, Monday through Friday for opening bell in the United States. Weekends, I'm off. Peace. But throughout the week, you can trade live with me from the challenge from $10 to 1,000. Also, we have 24/7 markets coming to Flash Trade here shortly, as well as a new seeker campaign that we will be rolling out for our mobile phone users. If you are having issues with the seeker, it is not Flash Trade's fault. Just clear your cache, clear your storage. It should resolve that immediately. If it does not, reach out to me with one of those beautiful tickets on Discord or through the platform itself, as we do actually have help right there available for you on flash.trade. Now, anything else that you guys want, we do have fstats.io, docs.flashtrade.trade, docs.flash.trade. Available for you if you want to dive in any deeper. Other than that, team meeting, time to go. I appreciate you guys watching. And as always, traders, I'll see you in the market.